All right, hey everyone. Welcome. Thanks for joining. Let's get right into it. Today is Monday, and what we're going to do is we're going to look for trades on the MNQ. There's been a lot of action because of all the events going on, a lot of stuff. We also have a pretty busy week in terms of economic news. So there's likely to be some movement this week. All right, first thing I'm going to do is we're going to pull up the MNQ over here. All right, on my chart, MNQ. Hopefully you guys checked out my Bitcoin analysis. I at 3 o'clock today Eastern time, I will have my analysis stream, and we will take a look at some charts as well. All right, so here's MNQ. Obviously, this thing is strong, right? So it doesn't matter why. All that matters is that it is. All right. Hey, Sean, how are you? Good to see you. All right. Thanks for joining. Okay, so, oh, and by the way, this Friday, I'll just mention it now. This Friday, most likely I will not be streaming this Friday because I have something to do and I don't think I'm going to be able to stream at this time. So I'll just letting you know now. Most likely I will not be streaming on Friday. All right. Plus, it's summertime anyway. No one watches me anyway. So it's not like I'm hurting people here. All right. So first things first, as you know, we're using the Trade Scanner Pro. Now, I'm trying to get this Apex account. As you can see, I have a Trade Evade account here with Apex, and I'm trying to reach the $3,000 objective. All right. Now, I'm nowhere close to it. So it's been a tough. May was a pretty tough month, going into like June, and June has been a tough month so far. I'm trying to do this in a sustainable way. There are unsustainable ways that I can do. Like, for example, I could put on mini lots. I could start throwing around 3 mini lots, 4 mini lots, and hope to make 15, 20 points a couple of times, and I'm there. Right. So there is a method to that, but it's not a method that you can really use for payouts, in my opinion. All right, so I'm going to take these off. We don't need to see these over here. So I'm going to turn these off. All right, now what I'm going to do here is I'm going to turn the Trade Scanner Pro on. Now, if you don't have the Trade Scanner Pro, make sure, or if you just got it, you got to make sure you turn these on. You got to turn these on. I'm willing to bet that there are people out there that are subscribing to it and they're not turning that on because they don't know, and they're like, "Oh, this thing sucks." Hey, Grego, how are you? All right. So, as you know, first thing I like to do is I like to go to the daily time frame, right, which is what we have over here. I'm going to open up the chart, and I'm only looking for two sets of levels. So, I don't need to do any analysis on this chart except for what I'm about to show you here. So, we have yesterday's low or Friday's low, and we have today's low. I'm only interested in that. That's the overnight low right there. Then I want Friday's high, which is over here, and today's high. That's all I want. All right. And we're at today's high right now. That's all I want. So that part is done. Now I'm going to go to the 60-minute chart. Why the 60-minute? Well, because in advance, I know that I'm only going to trade the 1-minute chart or 30-second chart. Those are the only two time frames that I'm looking at. You need to know that in advance when you're using something like the Trade Scanner Pro, because it's going to affect how you do your analysis portion. So because I'm going to work on a 1 minute or on 30-second time frames, I can use a 1 hour chart to get a sense of momentum. This is pretty simple. I'm looking for higher lows and higher highs. This is bullish. There's no question. I see higher low, higher low, higher high, higher high. That's it. My job is done. So I'm only looking to answer the question, what side should I be looking for trades on? Remember, the Trade Scanner Pro is a confirmation tool. So what side should I be looking for trades on? The long side, higher lows and higher highs. If this thing was showing me lower highs and lower lows, then I should be looking for shorts, right? So that's pretty simple. The analysis is done. That's how quick and simple it is. Now, the reason why we drew the levels on the chart was to see, are we at any support or resistance levels? Well, there may be some resistance here, so I just have to be aware of that. But until this market changes, I should be leaning on the long side, okay? So until we start breaking supports, at least breaking 1 hour lows, something, we got to start breaking something on the wrong side. I'm going to lean on longs, all right? So I'm going to switch this over to the 30-second chart. And so I have that. We have a pullback, and then I should have my 1 minute chart over here. All right. So those are the time frames that I'm monitoring: 30-second and 1 minute. Now, again, there's a lot of news floating around. There's a lot of stuff going on, a lot of, geopolitical, this and that, tweets going around, things like that. So markets can be highly random in this type of environment. You cannot, especially, get stuck on any opinions because things can change very quick. Now, one thing that when you're working with the Trade Scanner Pro on very small time frames, like a 30-second or a 1 minute, you have to pay very close attention to the trend status. You have to pay very close attention to this, especially on the 30-second chart, because this changes constantly. It changes constantly. So if that turns bearish, then we want to be aware of that, because if it turns bearish, that means the Trade Scanner Pro is no longer looking for longs. It's looking for shorts at that point. So I would have to consider counter trend mode. Okay, now there's a signal. I'm not that surprised. We had our heads up. But now here's the thing. As you guys know, with these signals, because we've been in a tougher environment, I don't take the initial signal. I'm using the signal as essentially as like a secondary heads up. That's how I'm using that. So what that means is I want to see how the first candle develops. I'm not taking the initial trade. I'm gonna put 2 contracts on here. Actually, no, I'm gonna do 1 contract because this environment's been tough and I've been losing money. So I'm gonna do 1 contract. Now, uh, so here's the thing. We want to see how this develops. You see what I mean? Like, first thing we're getting is a red candle situation. All right. What I'm looking for are retests of the blue line. Now, ideally, I would like to see maybe a pullback into like this mid area right here. Again, this is a filter. This is not the standard way of using the Trade Scanner Pro. This area is what I like to refer to as the risk gap. So we pull back into the risk gap and then maybe develop some kind of reversal. We have this little pin bar over here. That's a possibility, right? We go back above that blue line. I'll buy 1 contract. Now, see, we're trying to, it also depends on how that candle closes. Okay, there we go. I'm going to buy one. Now, if we pull back inside this risk gap again, like we are, see, it's trying, we pull back and we pull one of these type of moves, right? We pull back, so we pull back, and then we do one of these. I'll buy another one. I'll buy a 2nd contract. That's why I only bought 1. So if I'm wrong, all right, I lose on 1. But if I'm right, I'll have the opportunity to add to it. In this environment, I think that's a better way to go, because see what I mean? Like we got the little heads up situation. We got the little continuation, right, with the pin bar, but it's just fluctuating around right now. Now, again, the market leans on the strong side. So this thing, even if it's giving me some noise right now, it should not have a problem developing some support, minor support, somewhere in here. And if it doesn't, and I have to bang it out, it's okay. I only have 1 contract. But I have the opportunity to add now. Right? Again, this filter that I'm describing here, like the secondary entry filter, is only for this environment, because this environment, the summertime environment, has been harder. There's been lower momentum, lack of follow through, and it's only going to get worse over the next couple of months. So that's why I would rather use a technique like this, where I wait for a secondary opportunity to enter rather than taking the initial entry. Also, this is very important when you're working on larger time frames, because you're going to find yourself in this situation a lot. Okay, I'm going to add one. You're going to find yourself in this situation a lot where perhaps you're watching a 5-minute chart or a 15-minute chart or whatever. You missed the initial signal because whatever, for whatever reason, but there may be secondary or third or fourth opportunities to still enter into that trade if you get these type of price action patterns inside the risk gap. So that's especially important if you use larger time frames. And that's probably the best way. You should probably only trade that way, especially in this environment, if you're using larger time frames. So, or one thing you could do is with the initial signal, you take your first position, your smallest position, and then you use the other secondary and third signals to add, and that helps you control your risk. So that if it goes straight to the stop, you lose on one contract or whatever, 100 shares or whatever your initial position is, your small position. But if it works, it works with more size. That's how that helps to make money in the long run as well. Of course, there'll be times where you add and it stops out anyway. Okay, I like that. Let's see if we can get, I may sell one here because I like to do that before it gets to the profit objective. Again, this market's wild, okay? All it takes is like a tweet and this thing is on its way to the moon. All right, I'm going to sell one. I'm just taking profit off the table because it's just a good idea. The NASDAQ's wild, right? So when it looks really wild like that, just take one off. See what I mean? So now I'll try to ride the second. That's why I got two. Now I'll see if I can ride my winner. All right, and that's that. So the whole idea behind the Trade Scanner Pro is to help simplify the decision making process, not complicate it. I know there are some confusing parts to this, and that's why I have to do more instructional videos and stuff like that. But the idea is to make things simple so that you have a visual cue. It's like, okay, your risk is defined. What was the risk on this trade anyway? 31 points. That's not bad. My risk is defined. My profit objective is defined very clearly, 46 points. And I locked in one because I know better. Right? I mean, I often leave money on the table doing that, but when I see these spikes, the NASDAQ, I know how it behaves. So whenever you see like a spike like that, you don't get excited. You just sell into it. You just, especially if you have multiple contracts, you lock in one. It's just a good idea to do in this environment. It's less than 1.5 to 1, but who cares? On the 30-second chart, it doesn't matter. All right, now let's see if we can get this thing running. If I get a runner, what will happen if this market stays in my favor? What will happen is we will see the trailing stop will appear soon, and it will begin to follow the trade. The trailing stop, the whole purpose of the trailing stop is to help me stay in the trade longer. All right, let me move over here so you can see. Help me stay in the trade longer than I normally would have. So that helps me capture, instead of, if I'm looking at a 50-point move, maybe it helps me to capture a 100-point move. Remember, I'm never going to sell the top using a trailing stop. I'm never going to sell the top or buy back the bottom. It's never going to happen because it needs to retrace to touch the trailing stop. So we're at the profit objective. It's good to see. Now, again, the trend on that hourly was crystal clear, was it not? It was bullish. There was no question. So you just wait for a signal. This is the type of environment where you want to trade. When it's unclear, which we see that a lot, or if it's conflicted, meaning the larger time frame says one thing and the smaller time frame says something else, what I keep telling people is the simplest thing to do is just don't trade. Just walk away until it becomes crystal clear. Eventually, it will become crystal clear. And you could set up a notification on TradingView, right? Just set up a notification and it'll tell you when a signal pops up so you don't have to sit there and stare at your chart, right? So if the bigger picture was bullish, you wait till the smaller picture aligns with bullish if it's not bullish. But they should be aligned. Here's my trailing stop. You see it? There's a trailing stop right there. See that? So now, as the trade continues, the trailing stop is going to begin to follow the trade, right? Every candle close, the trailing stop is going to pop up further. Right now, at this point, it's reduced my risk in half, but if it's pulling all the way back there, man, I'm giving back all my profit. Well, at least on this contract. But do you see, like that was the key to this trade, was the bigger picture and the smaller picture were clearly aligned. So, you know, there's no question like I should be working on the long side. If you're using other things like an RSI or whatever, or a stochastic, it may be showing you overbought and you may be thinking, oh, it's a short, it's a short. It's not a short. The momentum's bullish. People are buying. It's just that simple. At some point, they'll stop buying, but right now, they're buying. Now, let's see if the trailing stop, how long can it keep me in this trade, and if I can hold through this pullback. These pullbacks are very hard to hold through because a lot of times you give back the entire trade in the pullback because the pullback just, it collapses. That happens. That's the whole point of the trailing stop. So the trailing stop is now at break even. If this thing goes all the way back to the trailing stop, I lose nothing on this trade. I'm just giving back all my profit, which sucks. But in exchange for that risk, the trade-off is I get a broader move. So you're never going to get the perfect situation. You're going to risk giving your money back in exchange for potentially capturing a broader move. Which is more important to you? Now, theoretically, there should be no decision here. Really, it should just be you touch the trailing stop, you get out. It should be that simple. But sometimes, especially if it's a tougher environment or you're having a tough month, sometimes it's just better to book profits because it's good for your psychology. It's good for your confidence. Because without confidence, you can't even play this game. Without confidence, you're just going to struggle. So sometimes booking profits, even if it's booking them early, at least you're green and you're not red, right? You do that for a little while. You build you build a little base, a little foundation, and then you can be more aggressive and let the winners run. All right. So anyway, see, and again, this could have gotten people short right here. If you're watching one of these nonsense, well, look, I'm not going to call oscillators nonsense. They have their place. But if you don't understand how to put them into perspective, they're going to throw you off in situations like this. If you're looking for these counter trend moves, there's no reason to. You should be looking for trend following moves. All right. So let it ride. Let it ride. My trailing stop now is way above my entry price. So now if I give it back, now I'm doing better than break even. At this point, let's see, how much have I captured here? Let's see. 63 points. All right. It's not bad. How's my P&L? Okay, I'm up $200. All right. Am I back above 50? I'm back above 50K. That's nice to see. All right, I may be taking my profit soon because I need to lock in profits. All right, it's been a tough couple of weeks and I haven't been making money. So it's like lock it in when you can. Lock something in, build a base. But it's again crystal clear. There was a crystal clear analysis right from the start. So it's those, and I tell people too, it's those conflicted times where, and I even say in the beginning of the stream, what you should do is walk away, and then of course I'll trade and lose money. All right, I'm taking it. I'm taking it. I'm out. Can you see that? You guys can't see that message. See that message right there? So that shows, that's a confirmation that I'm out. All right. So I'm out. I'm out of the trade. I'm out early because I don't want to give any money back. All right. So up 175. I'm back above 50K. All right, nice. So I made a little money back, and that's it. I'm not taking any more trades. I'm done. Nice trade early. We can watch the trade now and see how it continues. Let's see if I was right or if I was wrong in doing that. So the trailing stop is here, as you can see. And let's see how long it takes before it touches. So I got out around here, what, 169. The trailing stop is at 142. So I'm about giving back 25 points if I were still in the trade, which again is not horrible. But like I said, I'm interested in booking profits. I know that capturing big moves, while it's nice, is rare. Okay. So it's not a good idea to be all excited about big moves because usually, like I said, they're hard to come by. So you're better off taking what's more common, which are smaller moves. Follow me so far? Let's see how many people are watching. Yeah. All right. I should take Friday off just to take Friday off. But most likely I will not be streaming on Friday. Thinking of starting an eval with for Trade the Pool. Okay. Trade the Pool? I'm not familiar with them. Trade the Pool. Okay. How much are their evals, Sean? Trade the Pool. I have to look into that. They have a lot of rules. Okay. Yeah, I'm not familiar with that one. Trade the Pool. Okay, I'll look them up. Maybe I could be an affiliate for them. Because no one else wants me as an affiliate. These prop firms are unbelievable. But I think there's something going on in the industry. So for a 50K account, how much is the eval though? How much does it cost? Is it like, $100, $50? How much do they want? How much do you have to pay? So far, I was right in getting out here. But let's see. I want to watch this trade and see how long it takes to get to the trailing stop. Maybe this thing makes a higher high first. So yeah, the nice thing again about prop firms are pros and cons. And if you're going to go for the prop firm, yeah, Sean, I think it's a good idea. $125. That's kind of a lot. That's kind of a lot of money, especially if you're going to try to go all in and go for the eval quickly. It should be cheaper, and especially if they have a lot of rules. So if I were you, Sean, again, I have no incentive to promote any specific prop firm. I'm not an affiliate, as you know. I'm not an affiliate, but I like Apex because they're cheap. And if you're going to do a lot of evals, again, it doesn't matter if you use them or not. I get nothing for it. But like Apex, for example, for their 50K account right now, I believe they have an 80% coupon. So you're getting it for like $33, not 150. Which would you rather pay? And their rules are a lot simpler too. They don't have a lot of rules. Their rules are a lot simpler. So if you're going to go for like the, all in, $97. Okay, it's still a lot of money. You can get it for 1/3 the price. I'm going to look into Trade the Pool though. Maybe there's some benefits to it that they can justify that $97 price or whatever. I got to look into it though. But compare with Apex, the big ones, the most popular ones are Apex because of their pricing strategy. Sometimes you can get them for $16. Sometimes they'll have a 90% coupon on occasion, and you can get a 50K eval for $16. Talk about an all-in account, right? You could blow 10 of those, and you're only out $160. So first one is $47 with a coupon. Okay, okay, $47. Yeah, $16. Now, one of the great things about Apex too is they allow you to trade up to 20 accounts simultaneously. Like, why would you do that? Well, because you spread your risk out across 20 accounts. Now, of course, it's expensive. It's an expensive proposition. But if you make $100 and you copy it across 20 accounts, that's 2 grand. It's very easy to make, or I shouldn't say very easy, but it's realistic to make $100 without taking a big risk in your account. The thing is, that proposition is expensive. I mean, first of all, you have to beat 20 evals. So how are you going to do that? If you're going to try to do that all at one time, that means you have to pay for 20 evals, connect them all, and if you blow one, you blow all of them, right? So that could be an expensive proposition. Plus, when you beat an eval, remember there's a setup fee, so you have to pay 20 setup fees. So on one side it sounds amazing, but on the other side there is a heavy cost. So you have to make sure that your system is solid before you do something like that. But the potential, I like the potential. That's why I like Apex so much. I've seen guys using copy. Yeah, there's there are certain platforms you can buy a copy trade program, but there are also platforms that you could just copy through the platform. You know, like Tradeovate has like an extension for that. For right, but I think it's in the beginning, like what I just described is really like if you have a system that is proven and that you're making money and you're going to have to beat one eval at a time. I think that's the best way to do it. Beat one at a time with the same, just repeat the same eval beating strategy. And the eval beating strategy is simply you take a very high probability setup with size. And if you blow the account, it's like the outcome is either going to be you beat the eval or you blow the account. It's going to be one or the other, right? It's like flipping a coin. So that's not sustainable for payouts, but for beating evals, it's sustainable. I mean, for beating evals, it makes sense, right? So, and all you have to do, like and there's videos about this on YouTube. If you just Google it, there's guys that are showing, how they do it, blah, blah, blah. Um, with, like one example is like you can take like event trades, right? But you have to be careful with the event trades because a company like Apex, remember, they all have their own little nuanced rules when it comes to that. So with event trades, for example, like this week we have the FOMC, right? That's an event. So 2 p.m. Eastern time, what you would do if you had your own account, you can bracket the range at that time, and the price is most likely to spike one way or the other. So you have a long bracket on top, a short bracket on the bottom, right? And then you have put a price objective 30, 40 points. And if it spikes, usually you can get 30, 40 points pretty quickly in like a minute. If it spikes, also it could tap you in and stop you out too. That can happen. But the problem with something like Apex, for example, is they will not allow you to bracket the market. They'll allow you to take one side. So you could basically set up like you could just guess, basically flip a coin and guess either a long or a short. And if it works out, it works out. But if you do a bracket, they'll kick you out. They won't let you count that as a they'll basically close your account or whatever. They'll kick you out. So you can't bracket. You know why that you can't bracket is because it works. That's why anything that works, they use it as a rule against you. So no brackets. But if you pick one side and it happens to work out, so let's just say you put a long side, right? You put a stop to go long, and then you put a profit objective 50 points higher. Let's just say a buy stop and then a profit objective 50 points higher. And the market just happens to spike that way. Great, you win and you win because you had no short bracket. So it's either one or the other. Or you do a short bracket and that happens to work, then they'll count that. As long as you don't have the market hedged. Does that make sense? That's specific to them. Other prop firms may be okay with that. So you have to look at their very specific rules